Decentralized finance, or DeFi, represents a revolution in the financial sector, proposing a radical alternative to the traditional banking and financial system known as centralized finance, CEFI. At its core, DeFi is an ecosystem of financial applications built on blockchain technology, operating without the need for intermediaries like banks, brokers, or insurance companies. This means that instead of trusting institutions to manage your money and transactions, users interact directly with smart contracts and transparent protocols. The fundamental purpose of DeFi is to democratize access to financial services, making them available to anyone with an internet connection, regardless of their geographical location, credit history, or socioeconomic status. This stands in stark contrast to CEFI, where access is often restricted by bureaucratic barriers, high fees, and stringent Know Your Customer (KYC) verification. In the DeFi world, the doors are open to everyone, promoting unprecedented financial inclusion. The main distinction between DeFi and CEFI lies in trust. In CEFI, trust is placed in centralized entities that act as custodians of funds and guarantors of transactions, subject to human error, censorship, and manipulation. DeFi, on the other hand, operates on the principle of trustless operations, where the security and integrity of operations are ensured by cryptographic code and the immutable nature of the blockchain. This paradigm shift represents a profound transformation in how value is exchanged and financial services are accessed. ****. For the concept of decentralized finance to work, the technological foundation is crucial: the blockchain. A blockchain is a distributed and immutable ledger that securely and transparently records all transactions. This decentralized architecture is fundamental because it eliminates the need for a central authority to validate and record operations. Each transaction is verified by a network of computers, and once added to the chain, it cannot be altered or removed, ensuring data integrity and permanence. The immutability and transparency offered by blockchain are the pillars upon which DeFi is built. In a traditional system, a bank could theoretically alter records or be subject to attacks that compromise data security. On the blockchain, the cryptographic and distributed nature of the network makes data manipulation virtually impossible. Furthermore, all transactions are publicly visible, although user identities are pseudonymous, creating an unprecedented level of transparency that fosters trust in the system as a whole, not in a specific entity. Therefore, the absence of intermediaries is a direct consequence of using blockchain. Without the need for banks or other institutions to approve, process, and settle transactions, costs are reduced, speed increases, and bureaucracy disappears. The blockchain provides the infrastructure for smart contracts to self-execute, for digital assets to be transferred securely and efficiently, ensuring that the rules of the game are defined by code and not by arbitrary third-party decisions. Within the vast universe of blockchains, Ethereum emerged as the pioneer and the dominant platform for building the DeFi ecosystem. Launched in 2015, Ethereum was the first blockchain to robustly and programmatically introduce smart contract functionality, going far beyond the simple transfer of value that Bitcoin offered. This ability to allow developers to create complex, self-executing applications directly on the blockchain is what made it the natural home and main stage for the flourishing of decentralized finance. Ethereum's crucial differentiator lies in its programmatic capability. Unlike other more limited blockchains, Ethereum offers a virtual machine, EVM, that allows for the creation of complex and conditional logic. This means that developers can write code that defines the rules of a loan, an asset exchange, or insurance. And this code will be executed in a decentralized and immutable manner without the need for human intervention. This programmatic flexibility is the backbone of the entire DeFi ecosystem, enabling innovation in the creation of a vast range of decentralized financial products. Consequently, Ethereum is not just a platform. It is the fundamental infrastructure that allowed DeFi to transition from a theoretical idea to a practical reality with billions of dollars in value. Its robust network, active developer community, and the ability to host thousands of decentralized applications, DApps, have solidified its position as the preferred choice for most DeFi projects. Without Ethereum and its vision of a decentralized world computer, the decentralized finance revolution as we know it today would hardly have achieved its current scale and impact. At the core of decentralized finance, DeFi, innovation, and Ethereum's ability to drive it are smart contracts. These are not contracts in the traditional sense, but rather self-executing computer programs stored and run on a blockchain. They are designed to automate, verify, or enforce the negotiation or performance of a contract. The beauty of smart contracts lies in their ability to operate without the need for an intermediary, ensuring that the terms of the agreement are fulfilled exactly and transparently as programmed. The functionality of smart contracts is what truly differentiates DeFi from the traditional financial system. Instead of relying on lawyers, banks, or other institutions to ensure a loan is repaid or an asset exchange is settled, the smart contract does it automatically. Once the predefined conditions in the code are met, the contract executes, releasing funds, transferring assets, or recording actions without any human intervention. This eliminates the possibility of human error, fraud, or censorship, as the code is law and is immutably executed on the blockchain. This trustless nature of smart contracts is fundamental to the promise of DeFi. Users do not need to trust a counterparty or a centralized entity, but rather the cryptographic security of the blockchain and the logic of the code. This paves the way for the creation of a vast range of financial products that are more efficient, accessible, and transparent than their centralized counterparts. From loans and insurance to exchanges and derivatives, smart contracts are the backbone of every DeFi application, ensuring that operations are predictable and fair for all participants. Ethereum's ability to host and execute complex smart contracts is enabled by the Ethereum Virtual Machine, EVM. The EVM is in essence a decentralized runtime environment that executes smart contract code. Think of it as a global computer that processes all transactions and runs all programs deployed on the Ethereum blockchain. Every node in the Ethereum network runs the EVM, ensuring that the same code produces the same results everywhere, a concept known as determinism. The EVM's ubiquity and compatibility are crucial for the DeFi ecosystem. Since the EVM is a Turing-complete state machine, it can execute any computational logic, making it incredibly flexible for developers. This means that regardless of the complexity of a DeFi protocol, be it a lending system, a decentralized exchange, or a liquidity mechanism, the EVM can process the instructions and ensure that the smart contract rules are consistently applied across the network. This standardization and predictability are vital for trust and interoperability within DeFi. Furthermore, the EVM is an isolated and secure environment. Each execution of a smart contract within the EVM is isolated from the rest of the system, preventing errors or malicious code in one contract from affecting the integrity of the entire blockchain. This robustness and security are indispensable attributes for financial applications where trust in code execution is paramount. The EVM, therefore, is not just an engine. It is the guarantee that smart contracts will function exactly as intended, providing the secure computational foundation for the DeFi revolution. For developers to interact with and build upon the Ethereum Virtual Machine, EVM, a specific programming language is required. The primary and most widespread language for writing smart contracts on Ethereum is Solidity. Created specifically for the Ethereum platform, Solidity is a high-level, object-oriented language that resembles JavaScript, Python, and C++, making it relatively accessible for developers with traditional programming experience. The choice of Solidity as the standard language for Ethereum had a significant impact on the growth of DeFi. Its clear syntax and extensive available documentation allowed a global community of developers to build and innovate rapidly. This resulted in a rich ecosystem of tools, libraries, and frameworks that facilitate the creation, testing, and deployment of smart contracts. This ease of development is a key factor in the proliferation of new DeFi protocols, as it lowers the barrier to entry for innovation. Ultimately, Solidity is the bridge between human logic and EVM execution. It is through Solidity that the complex rules of DeFi protocols are translated into code that can be understood and executed by the blockchain. The ability to express complex financial agreements in a programmable and secure format is what enables the automation and decentralization that define DeFi. Without an effective language like Solidity, the vision of a programmable financial infrastructure on Ethereum would be much harder to realize. Liquidity is the oxygen of the DA ecosystem, and Ethereum plays a central role in attracting and maintaining this vital capital. Ethereum's vast user base, coupled with the global recognition of Ether as one of the leading crypto assets, has created a powerful network effect. This means that the more people and projects use Ethereum, the more valuable and attractive it becomes to new participants. This critical mass of users and digital capital is what allows DeFi protocols to operate at scale, offering deep liquidity, pools for trading, lending, and other financial operations. The market value of Ether ETH is not just a price indicator. It represents a significant reserve of capital that can be utilized within the DE ecosystem. Many DeFi protocols use E as collateral for loans, as a trading pair on decentralized exchanges, or as a base for creating other assets. This deep integration of ETH into DeFi mechanisms ensures a constant flow of available capital, which is essential for the efficiency and stability of decentralized markets. Without this robust liquidity, users' ability to conduct large and fast transactions would be severely limited. Furthermore, the trust established in the security and resilience of the Ethereum network over the years directly contributes to attracting capital. Investors and users feel more secure allocating their funds to protocols built on a blockchain that has proven its robustness. This virtuous cycle, more trust attracts more capital, which in turn increases the liquidity and utility of protocols, is a testament to Ethereum's network effect and its ability to be the primary liquidity hub for global DeFi. One of the most revolutionary and powerful concepts that Ethereum brought to DeFi is composability, often referred to as money Legos. This means that smart contracts and protocols built on Ethereum are designed to be modular and interoperable, like Lego bricks. Each DeFi protocol, whether it's a liquidity pool, a lending protocol, or a stablecoin, can be seen as an independent building block that can be easily combined with other blocks to create more complex and innovative financial applications. This ability to combine and recombine different DeFi protocols is what drives exponential innovation in the ecosystem. For example, a user can take a liquidity token from a decentralized exchange, DEX, use it as collateral in a lending protocol to take out a loan in a stable coin, and then use that stablecoin to invest in another yield protocol. All of this is possible because Ethereum's smart contracts follow open standards and can talk to each other, creating synergies that would be impossible in isolated, centralized financial systems. Composability not only accelerates innovation but also increases the efficiency and diversity of products available to users. Developers don't need to reinvent the wheel. They can leverage existing infrastructure and already tested protocols to build new solutions, saving time and resources. This unique characteristic of Ethereum is what allows DeFi to evolve so rapidly, offering an ever-increasing range of financial services that integrate fluidly and create value in unexpected ways. Internal interoperability is a fundamental pillar that supports the fluidity and functionality of the DeFi ecosystem on Ethereum. Unlike data silos and closed systems found in traditional finance, Ethereum was designed to allow different decentralized applications, DApps, and smart contracts to interact seamlessly with each other. This ability for protocols to communicate and collaborate is what enables the creation of complex value chains and the automation of financial processes that span multiple platforms. This interoperability is achieved through common token standards such as ERC-20 for fungible tokens and ERC-721 for NFTs, and the open nature of smart contracts. When a DeFi protocol issues an ERC-20 token, it can be immediately recognized and used by any other application on Ethereum that supports this standard. This eliminates the need for complex bridges or adapters for assets and functionalities to move between different platforms, creating a cohesive and integrated financial environment. In essence, Ethereum's internal interoperability transforms the DeFi ecosystem into a network of connected financial services where value and information can flow freely. This feature is vital for the user experience, as it allows people to use multiple DeFi services frictionlessly, optimizing their strategies and maximizing their opportunities. It is the foundation for composability and for building a truly global, open, and permissionless financial system, where innovation is encouraged by collaboration and the ability to build upon the work of others. Decentralized exchanges, DEXs, are one of the most visible and widely used pillars of the DeFi ecosystem on Ethereum. Unlike centralized exchanges, SEXs, which operate as trusted intermediaries for asset custody and trading, DEXs allow users to trade crypto assets directly with each other without the need to open an account, undergo Know Your Customer (KYC) verification, or entrust their funds to third parties. This is possible thanks to smart contracts, which automate the order matching and settlement process, ensuring that transactions occur transparently and permissionlessly. Platforms like Uniswap and SushiSwap are prominent examples of DEXs that have revolutionized how digital assets are traded. They primarily operate on the automated market maker (AM) model, where users provide liquidity to trading pools instead of relying on a traditional order book. Asset prices are determined by algorithms based on the ratio of assets within the pool, and trades are executed directly against these liquidity pools. This ensures continuous liquidity and allows users to trade at any time with full control over their funds. The importance of DEXs goes beyond simple asset trading. They are a vital component of DeFi composability, allowing new tokens to be listed and traded instantly without the need for approval from a central entity. This fosters innovation and price discovery for a vast range of digital assets, from DeFi protocol governance tokens to NFTs. DEXs on Ethereum represent the true essence of financial freedom, offering an open and accessible market for everyone. Another fundamental category driving the growth of DeFi on Ethereum are decentralized lending and borrowing platforms. Unlike traditional banks, which require extensive credit checks and intermediaries to facilitate loans, protocols like Aave and Compound allow users to lend their crypto assets to earn yield, interest, and borrow using their own crypto assets as collateral. The entire process is automated by smart contracts, ensuring transparency, efficiency, and the absence of intermediaries. These platforms operate through liquidity pools, where liquidity providers deposit their assets and borrowers can access them. Interest rates are determined algorithmically based on supply and demand within each pool, making them dynamic and transparent. A crucial feature is that most DeFi loans are over-collateralized, meaning the value of the collateral provided by the borrower is greater than the value of the loan requested. This mitigates risk for liquidity providers and ensures the solvency of the system. The impact of these protocols is immense, as they open the door to a new form of credit access and yield generation. Users can unlock the value of their digital assets without selling them, or they can lend their idle assets to earn passive income. This democratization of access to capital and the ability to participate in permissionless interest markets are key elements attracting both individual and institutional investors to the DeFi space on Ethereum. Decentralized stablecoins play a vital role in the stability and utility of the DeFi ecosystem on Ethereum. While volatility is an inherent characteristic of most cryptocurrencies, stablecoins are designed to maintain a stable value, usually pegged to fiat currencies like the US dollar. In the DeFi context, decentralized stablecoins, such as DE, are particularly important because they are issued and managed by smart contracts without the need for a centralized entity to back them with cash reserves. DAI, for example, is a crypto-backed stablecoin where users can generate DE by locking up other cryptocurrencies, like AZ, as collateral in a smart contract. This mechanism ensures that DA maintains its value close to that of the US dollar, but in a decentralized and transparent manner. The absence of a centralized issuer reduces censorship risks and counterparty failure, making DA a robust financial tool for transactions, lending, and investments within DeFi. The existence of decentralized stablecoins is crucial for the mass adoption of DeFi, as they offer a safe haven for users to protect their assets from cryptocurrency market volatility without having to leave the blockchain ecosystem. They facilitate trading, lending, and participation in yield protocols, providing a stable and reliable medium of exchange. Without decentralized stablecoins, DeFi would be much riskier and less accessible to most users, limiting its growth potential and its ability to compete with traditional finance. Beyond decentralized exchanges, lending, and stablecoins, the DeFi ecosystem on Ethereum is fertile ground for a vast array of other innovative financial product categories. The flexibility of smart contracts and the composability of the Ethereum network allow developers to create solutions for financial needs that go far beyond the basics. This includes everything from decentralized insurance, which offers protection against specific crypto world risks, to derivatives markets that enable the trading of futures and options entirely on Chain. The innovation doesn't stop there. Decentralized asset management, for example, allows users to create and manage crypto asset portfolios transparently and automatically, without the need for traditional fund managers. Furthermore, the rise of NFTs, non-fungible tokens, on Ethereum has opened new frontiers for DeFi, with the emergence of NFT-backed lending markets and NFT fractionalization platforms, democratizing access to high-value digital assets. These other categories demonstrate Ethereum's capacity to be a laboratory for financial experimentation. Every day, new ideas are prototyped and launched, expanding the boundaries of what is possible with decentralized finance. The diversity of products is a testament to the robustness of Ethereum's infrastructure and its developer community, who continue to build a more inclusive, efficient, and innovative financial system for the future. As the DeFi ecosystem on Ethereum grew exponentially, one of the most prominent challenges that emerged was the issue of scalability, primarily manifested by high gas fees and network congestion. Gas on Ethereum is the unit of measurement for the computational cost of a transaction or smart contract operation. When network demand is high, users compete for their transactions to be included in blocks by miners, and, in the future, validators, which drives up the price of gas and, consequently, the cost of transactions. This gas pain made DeFi operations prohibitively expensive for many users, especially for those with smaller capital or for lower value transactions. Performing a simple swap on a DEX or interacting with a lending protocol could cost tens or even hundreds of dollars in gas fees during peak demand. In addition to the cost, the network also suffered from slow transaction times, as the limited number of transactions per second that Ethereum could process led to significant delays in confirming operations. These challenges, while a sign of Ethereum and DeFi's success and popularity, also represented a significant barrier to mass adoption. User experience was negatively impacted, and the accessibility that DeFi promised was being compromised by operational costs. It became clear that for the ecosystem to continue growing and attracting more users, urgent solutions for the scalability of Ethereum's base layer would be necessary. In response to the scalability challenges of Ethereum's main layer 1, Layer 2 solutions emerged, becoming a vital component for the future of DeFi. These solutions operate on top of the Ethereum blockchain, processing transactions off the main chain but still deriving their security from Layer 1. The goal is to drastically increase transaction processing capacity and reduce costs without compromising Ethereum's inherent decentralization or security. Among Layer 2 solutions, rollups stand out, coming in two main variants: optimistic rollups like Arbitrum and Optimism, and ZK rollups like SSync and Starknet. Rollups bundle hundreds or thousands of off-chain transactions into a single batch and publish it to Ethereum Layer 1, significantly reducing the cost per transaction. While optimistic rollups assume transactions are valid and use a challenge period to detect fraud, ZK rollups use cryptographic validity proofs to ensure the correctness of transactions, offering instant finality. In addition to rollups, other Layer 2 approaches include sidechains like Polygon, which are independent but EVM-compatible blockchains that connect to Ethereum via bridges, while offering high scalability and low costs. Sidechain security depends on their own validators, making them slightly less decentralized than rollups. State channels also exist for fast peer-to-peer transactions. The proliferation of these Layer 2 solutions is a testament to Ethereum's resilience and adaptability, ensuring that DeFi can scale to meet global demand. The vision for the future of Ethereum, and by extension, the DeFi ecosystem, is a multi-layer future. This means that Ethereum Layer 1, the main blockchain, will act as the security and finality layer, where transactions are ultimately settled and cryptographic security is guaranteed. It will be the unshakable foundation upon which all DeFi activity is anchored. However, the vast majority of daily transactions and DApp interactions will occur on Layer 2 South, which are optimized for speed and low costs. This layered architecture allows Ethereum to maintain its decentralization and security, which are crucial attributes for trust in financial applications, while delegating scalability to secondary solutions. It is an approach that aims for the best of both worlds, the robustness of a decentralized blockchain and the efficiency needed to support a massive volume of users and transactions. The continued development and adoption of Layer 2 South are essential for DeFi to reach its mass adoption potential, becoming accessible and viable for billions of people. Instead of a single blockchain trying to do everything, the future of DeFi on Ethereum is collaborative and modular. Layer 2 South are not competitors to Ethereum, but rather extensions that enhance its functionality and capacity. This evolution towards a multi-layer ecosystem is a testament to Ethereum's and its community's adaptability, ensuring that the platform remains at the forefront of innovation in decentralized finance, ready to support the next wave of global growth and adoption. The security of Ethereum, and consequently the trust that the DeFi ecosystem places in it, has historically been guaranteed by a robust consensus mechanism, proof of work, POW. In POW, miners compete to solve complex cryptographic puzzles to add new blocks to the blockchain. This process requires significant computational power, making it extremely expensive and unfeasible for a single malicious actor to control the network or reverse transactions. This computational security is the basis of Ethereum's immutability and censorship resistance. However, Ethereum is in a monumental transition to a new consensus mechanism. Proof of stake, POS, a process known as the merge and posse. Instead of miners, validators propose and validate new blocks, and they are selected based on the amount of Ether, EV, they have staked on the network. This model not only drastically reduces the network's energy consumption, making it much more sustainable, but also enhances security by making attacks even more expensive and risky, as malicious validators can have their staked ETHs slashed. The transition to POS is a crucial step for the future of Ethereum and DeFi. It not only addresses the environmental concerns associated with POW, but also prepares the network for future scalability improvements, such as sharding. The inherent security provided by these consensus mechanisms is what allows users and DeFi protocols to operate with the certainty that their transactions are final and that the network will not be compromised, solidifying Ethereum as a reliable and resilient financial platform. Robust decentralization is one of Ethereum's most valuable characteristics and a fundamental pillar for trust in DeFi. Unlike centralized financial systems, where a single entity or a small group of entities holds control and can be a single point of failure, the Ethereum network is globally distributed. This means that thousands of independent nodes, computers, operate the network worldwide, validating transactions and maintaining copies of the ledger. This geographical distribution and diversity of operators make the network extremely resistant to censorship, attacks, and outages. The absence of a centralized control point ensures that no single entity can unilaterally change network rules, block transactions, or manipulate data. Decisions about Ethereum's future are made by community consensus, ensuring that power remains in the hands of many, not a few. For DeFi, this decentralization is vital, as it ensures that financial protocols operate fairly and impartially, without the possibility of manipulation by powerful third parties. This censorship resistance and the ability to operate permissionlessly are what make DeFi on Ethereum such an attractive alternative to the traditional financial system. Users can transact and access financial services without fear of being blocked or having their funds frozen by a central authority. The robustness of Ethereum's decentralization is the guarantee that DeFi's principles of openness and inclusion will be maintained, regardless of external pressures. The open source nature of smart contracts and the Ethereum blockchain itself fosters an unprecedented level of audits and transparency, which is crucial for security and trust in the DeFi ecosystem. Unlike proprietary financial systems where code and operations are kept secret, smart contracts on Ethereum are public and can be inspected by anyone. This allows the community of developers, security researchers, and users to examine the code for vulnerabilities, bugs, or malicious intent. This code visibility is complemented by the transparency of transactions on the blockchain. Every operation that occurs on Ethereum is publicly recorded and can be verified by anyone. Although user identities are pseudonymous, the flow of assets and interactions with smart contracts are fully auditable. This traceability and the ability to verify the integrity of operations in real time significantly increase users' trust in DeFi protocols, as they can confirm that the rules are being followed and that their funds are secured. In addition to continuous community audits, many DeFi protocols undergo professional security audits conducted by specialized firms. These audit reports are usually published, providing an additional layer of assurance for users. The combination of open source nature, on-chain transparency, and independent audits creates an environment where security is constantly tested and improved, establishing Ethereum as a reliable platform for building and operating decentralized financial applications. In the universe of decentralized finance, DeFi, built on Ethereum, decentralized autonomous organizations, DAOs, represent a revolutionary concept of governance. Unlike traditional companies, which are hierarchical and controlled by a board or a CEO, DAOs are organizations whose rules are encoded in smart contracts and operate autonomously on the blockchain. Decision-making in a DAO is distributed among its governance token holders, who can vote on proposals that affect the protocol's future, from updating parameters to allocating funds. The essence of a DAO in the DeFi context is the elimination of the need for a central authority to manage the protocol. This means that power is not concentrated in the hands of a single development team or a select group of investors, but rather disseminated among all participants who hold the governance tokens. This decentralized structure ensures that the protocol evolves in a way that reflects the interests of its community, fostering a sense of ownership and participation among users. Therefore, DAOs are more than just a voting mechanism. They are an organizational model that allows for large-scale collaboration and coordination in a transparent and censorship-resistant manner. By allowing the community to decide on crucial matters, DAOs strengthen the resilience and adaptability of DeFi protocols, ensuring that they can adjust to market changes and user needs democratically and efficiently. On-chain governance, facilitated by DAOs on Ethereum, is a significant advance in the democratization of decision-making in the financial sector. In traditional systems, decisions affecting millions of people are often made behind closed doors by a small group of executives or regulators. In DeFi, through DAOs, any governance token holder has the right to propose and vote on changes, creating a more equitable and transparent governance model. This decentralized approach to governance ensures that community interests are represented and that decisions are made in a way that is more aligned with the needs of the protocol's users. Whether it's adjusting fees, implementing new features, or allocating treasury resources, the process is open and publicly verifiable on the blockchain. This contrasts with the opacity and lack of accountability that often characterize centralized financial institutions. The ability to directly participate in the governance of a DeFi protocol empowers users in an unprecedented way. They are not mere consumers of services, but rather active stakeholders with a voice in the project's development and direction. This democratization of decision-making is one of the pillars of DFE's promise to build a fairer and more accessible financial system, where power is distributed and innovation is driven by community collaboration. The impact of DAOs on DeFi governance can be best understood through notable examples of protocols that have successfully implemented this structure. Projects like Uniswap, the largest decentralized exchange, and Aave, one of the leading lending protocols, are governed by their respective DAOs. Holders of UNI and AAVE tokens, respectively, have the power to vote on proposals that define the future of these multi-billion-dollar ecosystems, from fee distribution to the integration of new assets. Another example is MakerDAO, which governs the decentralized stablecoin DAI. MKR token holders vote on proposals that affect DAI stability, such as stability fees and accepted collateral types. These examples demonstrate that decentralized governance is not just a theory, but a functional practice that allows complex, high-value protocols to be managed transparently and responsively to community needs. These success stories illustrate how DAOs have become an integral and innovative part of the DeFi ecosystem on Ethereum. They prove that it is possible to build and operate large-scale financial systems without the need for a central authority, relying on the power of community consensus. The evolution and proliferation of DAOs are a testament to Ethereum's ability to empower true decentralization, not only in terms of technology, but also in terms of governance and decision-making. Ethereum underwent one of the most significant upgrades in blockchain history, known as the merge. This event marked the transition of the network's consensus mechanism from proof of work, POW, to proof of stake, POS. Before the merge, Ethereum's security relied on miners solving energy-intensive computational puzzles. With the merge, security is now guaranteed by validators who stake their Ether, ETH, making the network drastically more energy efficient and environmentally sustainable. The benefits of this transition are multiple and profound for the DI ecosystem. Firstly, the reduction in energy consumption is a milestone, aligning Ethereum with global sustainability goals and eliminating the need for intensive mining hardware. Secondly, POS enhances network security by making attacks more expensive and risky for malicious validators who can have their staked ETH penalized, slashed. This increases the platform's trust and resilience, which are crucial for decentralized financial infrastructure. Furthermore, the merge not only changed the consensus mechanism but also laid the groundwork for future scalability upgrades. By decoupling security from execution, Ethereum prepared itself to implement solutions like sharding, which will allow a massive increase in transaction processing capacity. This strategic transition solidifies Ethereum's position as the leading platform for DeFi, ensuring it can scale to meet the growing demands of a global, decentralized financial system. Following the successful transition to proof-of-stake, pause. With the merge, the next major frontier for Ethereum scalability is the implementation of sharding. Sharding is a database partitioning technique that divides the blockchain into smaller, more manageable segments called shards. Instead of every node in the network processing all transactions, each shard will process only a subset of them. This allows the network to process a much larger volume of transactions in parallel, drastically increasing its capacity and throughput. For the DeFi ecosystem, the implementation of sharding represents a quantum leap in massive scalability. With more shards operating simultaneously, Ethereum will be able to support an exponentially higher number of transactions per second, significantly reducing network congestion and gas fees. This will make interactions with DeFi protocols faster, cheaper, and more accessible to a global audience, removing the barriers that currently limit large-scale adoption. Sharding will not only increase transaction capacity, but also enhance network decentralization in the long term, as it will be easier for users to run light nodes that only verify a specific shard. This combination of scalability and decentralization is vital for the future of DeFi, allowing Ethereum to become a truly global infrastructure for decentralized finance, capable of rivaling and even surpassing the capacity of traditional financial systems. Ethereum's journey towards its next generation, with the merge and the future implementation of sharding, is paving the way for a sustainable future for DeFi. The shift to proof-of-stake has already reduced the network's energy consumption by over 99%, transforming Ethereum from one of the most energy-intensive blockchains to one of the most efficient. This drastically smaller environmental footprint is crucial for the mainstream acceptance and adoption of DeFi, addressing one of the biggest criticisms of blockchain technologies. Beyond energy efficiency, the upgrades aim to make Ethereum not only more scalable, but also more secure and resilient. A more scalable system means that more users can participate in DeFi without facing prohibitive costs or delays, promoting global financial inclusion. A more secure and decentralized system, in turn, increases the trust of users and institutions, encouraging continuous innovation and investment in the space. In essence, the Ethereum 2.0 upgrades are more than just technical improvements. They are a commitment to the longevity and viability of DeFi as a global alternative to the traditional financial system. By becoming more efficient, scalable, and sustainable, Ethereum is solidifying its position as the essential infrastructure for the next era of finance, ensuring that the transformative potential of DeFi can be fully realized for billions of people worldwide. One of the most profound and transformative impacts of decentralized finance, DeFi, on Ethereum is its ability to promote financial inclusion on a global scale. Billions of people worldwide still lack access to basic banking services or credit, whether due to a lack of documentation, remote location, or being considered high risk by traditional systems. DeFi, by its permissionless nature, removes these barriers. Anyone with a smartphone and internet access can interact with DA protocols, regardless of their nationality or financial history. This inclusion manifests in the ability to access loans, competitive yield savings, insurance, and currency exchange markets, all without the need for a traditional bank account. In many emerging economies where banking infrastructure is deficient and local currencies are volatile, DeFi offers a lifeline, allowing individuals to protect their savings in stablecoins and access capital for ventures. Ethereum, as the leading platform for these protocols, is at the forefront of this financial democratization. By empowering the unbanked and underbanked, DeFi not only offers new economic opportunities, but also promotes financial autonomy. People can manage their own assets, participate in global markets, and make financial decisions without the oversight or permission of third parties. This fundamental shift in control is at the core of DeFi's promise of financial inclusion, and Ethereum provides the robust and decentralized infrastructure for this vision to become a reality for millions. The comparison between DeFi and the traditional financial system, CeFi, reveals a stark difference in terms of transparency and efficiency. In CeFi, operations are often opaque, with hidden fees, slow processes, and the need to trust intermediaries to verify and settle transactions. This results in higher costs and less control for the end user. DeFi, built on the Ethereum blockchain, reverses this logic, making all operations publicly visible and auditable. Transparency in DeFi is inherent to blockchain technology. Every transaction and every interaction with a smart contract are recorded on a public, immutable ledger. This means that anyone can verify the flow of funds, the conditions of a loan, or the composition of a liquidity pool, without the need to rely on third-party reports or audits. This radical openness eliminates information asymmetry and the possibility of manipulation, building a financial system based on trust and code, not institutions. In terms of efficiency, DeFi surpasses CeFi in many aspects. Transactions on Ethereum, although subject to gas fees, are processed 24/7 without bank holidays or closing hours. Settlement is almost instantaneous for many operations, and transaction costs, especially with the rise of Layer 2 solutions, are becoming increasingly competitive. This combination of full transparency and operational efficiency makes DeFi an attractive alternative for those seeking faster, cheaper, and more reliable financial services. Disintermediation is at the core of DeFi's transformative impact, and it's where Ethereum shines as the platform that enables the removal of traditional intermediaries. In the conventional financial system, banks, brokers, clearinghouses, and other institutions act as custodians and facilitators of all financial transactions. They charge fees for their services, add layers of bureaucracy, and control access to capital and financial products. DeFi, in turn, uses smart contracts and blockchain technology to automate these functions, eliminating the need for these intermediaries. This elimination of intermediaries results in several benefits. Firstly, it drastically reduces costs, as fees previously paid to banks and brokers are minimized or redistributed to the network's liquidity providers. Secondly, it speeds up transactions, as automation via smart contracts allows for near-instant settlement without the delays inherent in manual and bureaucratic processes. Finally, and perhaps most importantly, disintermediation returns full control of assets and financial decisions directly into the hands of users. Ethereum, with its ability to host complex smart contracts and its decentralized network, is the ideal infrastructure for this disintermediation. It allows users to interact directly with financial protocols without the need to trust third parties. This paradigm shift represents an existential threat to the business model of many traditional financial institutions, but at the same time, it opens up a world of opportunities for individuals and small businesses that were previously marginalized by the system. The emergence and growth of decentralized finance, DeFi, on Ethereum represent not just a technological evolution, but the creation of a new paradigm for the future of global finance. Far from being a mere optimization of the existing system, DeFi proposes a fundamental restructuring of how value is created, exchanged, and managed. It is based on principles of openness, transparency, inclusion, and permissionlessness, challenging the power structures and business models that have dominated the financial sector for centuries. This new paradigm is characterized by a financial system that is inherently more resistant to censorship and manipulation. As DeFi protocols are built on decentralized blockchains like Ethereum, they operate outside the control of any government, corporation, or central entity. This means that users have sovereignty over their own funds and can participate in global markets without fear of being excluded or having their assets frozen by arbitrary decisions. Ultimately, DeFi, powered by Ethereum, is building the foundation for a financial system that is truly global and accessible to everyone. It has the potential to unlock trillions of dollars in value for people who were previously marginalized, and to create new forms of financial collaboration and innovation. This is a future where finance is not a privilege of the few, but a right for all, and Ethereum is the architecture that makes this vision a tangible reality. Throughout this analysis, it has become evident that Ethereum is not just a blockchain, but the backbone and primary catalyst for the growth of decentralized finance, DeFi. We began with an understanding of DeFi as a radical alternative to the traditional financial system, driven by the need for immutability and transparency that only a blockchain like Ethereum can offer. We then explored how smart contracts and the Ethereum virtual machine, EVM, form the programmable pillars that enable the automation and trustless execution of financial services. We discussed the vital importance of liquidity, interoperability, and composability, money Legos, which transform the DeFi ecosystem into a fluid and innovative network where different protocols can integrate and create complex synergies. The diversity of DeFi products, from DEXs and lending platforms to decentralized stablecoins and NFTs, is a direct testament to the flexibility and innovation capacity that Ethereum provides. We also addressed the scalability challenges and emerging Layer 2 solutions, which ensure the sustainability and accessibility of DeFi in the future. Finally, we reaffirmed the strength of trust built on Ethereum's inherent security through POW and POS and its robust decentralization, complemented by transparency and open-source audits. Decentralized governance via DAOs demonstrated how decision-making power is returned to the community. In summary, Ethereum is the essential infrastructure, the engine of innovation, and the catalyst for decentralization that has allowed DeFi to flourish and challenge the financial status quo. Asterisk. Despite the exponential growth and the vast array of existing products, the potential of the DeFi ecosystem on Ethereum is still largely untapped. What we have seen so far is just the beginning of a much larger transformation. New asset classes, especially the integration of real-world assets, RWAs, onto the blockchain, represent a promising frontier. This includes the tokenization of real estate, stocks, commodities, and other traditional assets, opening the doors to unprecedented liquidity and accessibility. Beyond RWAs, continuous innovation in areas such as decentralized parametric insurance, prediction markets, and self-sovereign identity, SSI, promises to further expand DeFi's utility and reach. Ethereum's ability to be a platform for creating programmable money and programmable finance means that possibilities are limited only by developers' creativity and emerging market needs. We are just scratching the surface of what can be. The future of DeFi on Ethereum will also benefit from continuous improvements in user experience, greater education on the risks and benefits of decentralization, and the evolution of regulatory frameworks. As the technology matures and becomes more accessible, the potential for DeFi to integrate with the global economy and serve billions of people becomes increasingly real, driving the next phase of growth and adoption. Ultimately, Ethereum's contribution to the growth of decentralized finance is the materialization of a vision of an open financial future. It's not just about technology, but a philosophy that seeks to dismantle access barriers, promote radical transparency, and return financial control to individuals. Ethereum, with its robust infrastructure, vibrant community, and continuous development roadmap, is the driving force behind this transformation. This open financial future is global and borderless. It transcends the geographical limitations and bureaucracies of traditional systems, allowing anyone to participate in a truly global financial market. Innovation is accelerated by composability and the open-source nature, where developers can build on the shoulders of giants, creating increasingly sophisticated and efficient solutions. Ethereum has not only contributed to DeFi's growth, it has shaped it and continues to be its main driver. Its legacy will be that of having provided the architecture and vision for a fairer, more inclusive and resilient financial system. The horizon of DeFi is vast, and Ethereum is positioned to continue leading the way, redefining what is possible in the world of finance and impacting the global economy in ways we are only beginning to comprehend.